I have a special guest, Bryan Bottarelli, with me today, technical options expert. And today we're talking about strategies that win. Let's get started. I have Bryan Bottarelli with me here today. Bryan is a technical options expert, the founder and head tactician of Monument Traders Alliance. I'm so excited to have him here and share his knowledge with us. Bryan, thank you so much for joining me
Yeah,
today.
Lacey, you bet. I mean, I love talking about the markets. I love talking about trading. So this seemed like a perfect fit.
Yeah, so here we go. I wanted to talk about retail investors today, and we're kind of just going to jump right in here. So you have an options trading strategy that hopefully you're going to open up to us a bit about. And guys, stay tuned because Bryan's also going to share some of his top picks with us, so you don't want to miss out on that. But Bryan, you guarantee an 80% win rate with your strategy here. And honestly, that's impressive. But most individual traders, they'd be ecstatic with that kind of a success. And this is kind of an open-ended question here, but what are retail investors and traders doing wrong that they're not hitting that?
Yeah, well, that is a very open-ended question. Retail traders, I think primarily they have it in their minds that when they enter a trade, they want to hit 100% winner, a 200% winner, a 300% winner. You know, they want to always get a grand slam home run. And
Mhm.
the reality of the market is it doesn't work that way.
Mhm.
So maintaining an 80% win rate is something that, I'm really proud of because I'm not always gearing for these huge 100% winners. Like when I trade, if I hit a 20, 30, 40% winner within, an hour or two, and that trade is now starting to reverse and go lower, I will, without hesitation, take those profits, sell that trade. And
Mhm.
if the trade dips back down, we can just go right back in. So instead of taking, one 10% winner because it goes up and down and up and down and up and down all day, we could take a 30% winner, reload it, get it, another 30% winner, sell it, close it, enter it back again. And that process, in my opinion, is much far more effective than the enter and hope for a huge winner and then sell it strategy. And that's what I think the trap that most retail investors fall into is
Mhm.
that kind of mindset.
So can you kind of give us a simple explanation of how you're choosing stocks? I mean, there's literally thousands of options to choose from, as you know. So I'm sure viewers are interested to learn a little bit more about your approach.
Yeah, so my approach is, there's multiple types of strategies and facets to the approach. One that I like to trade on a day-to-day basis is what I call a W pattern or an M pattern. And
Mhm.
these patterns I use to track using a 3-minute stock chart. So I'm looking at 3-minute candlesticks, and essentially a W pattern is a bullish pattern, an M pattern is a bearish pattern. And what I like to look at is, it's kind of like I call it the recency bias.
Okay.
So if we see a double bottom, like say for instance, Microsoft finds support at the 400 level, right at 9:30 in the morning and then right at 10 o'clock in the morning, that kind of like finding support, bouncing, finding support again, bouncing,
Mhm.
that it means that the stock has found support 2 times at the same level within the same day, and that pattern would form a W. If I see something like that happen, I see support twice, then I would play in an upside call and play that stock higher. Now, the cool thing is if you take a W and you flip it upside down, you get an M,
Mhm.
right? So it's the same thing on the downside. If you get double resistance once, resistance twice, that forms an M, and then that would trigger a put option play that stock is going to go down. So the ability to trade upside calls with W patterns and downside puts with M patterns, that ability, I don't have to like hope and pray that the market is going to go up forever, which again, a lot of the retail investors do.
Mhm.
They like to buy and hold. They like to buy calls, and that's fine. But when the market reverses and it's going lower, there has to be a strategy to profit on those days as well. And by playing the combination of W patterns and M patterns, that gives me that ability. And that's a big reason why we've been able to have that sustained success over a number of years.
Mhm. Now, Bryan, on this channel, we've talked about entry points and exit points time and time again. Is it as simple as that, though?
Well, entry and exit points are probably the number one most important item when it comes to trading. You know,
Mm-hmm.
like I've got like just the other day, right? This guy that I was talking to, he said he was trading Coinbase, right?
Mm-hmm.
And he bought Coinbase options, and then Coinbase had a big run, and then it came right back down, right? So he was saying that like I entered Coinbase and then my options exploded and I was up 60 grand. And I asked him, like, that's awesome. Like, did
Mm-hmm.
you at least sell half of your position when it was up 60 grand?
Mm-hmm.
He was like, no, 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 no. It went down the next day. And then I thought it would reverse. So I bought some more. And then it kept going down. And then I ended up selling it for a loss. And I'm like, oh my gosh, man. Like,
Mm-hmm.
that's the one mistake that most of these traders make, is that they think, it's just going to go up forever. So
Mm-hmm.
the rule of thumb that I like to give, and this is going to be great for just entry level people just starting trading, or even like the veteran traders who are always wondering like when to sell, when should I buy
Mm-hmm.
more? If there's ever a position where you look at your position, you're like, I love this gain, I'm very happy with this gain, but I think it could keep going up, so I'm not sure. That's the time when you want to sell half.
Mm-hmm.
Right? So you take your 60 grand of profit, you take 30 grand of it, put it in your pocket, and then you still have some to play the kind of like the greed
Yeah.
notion of that, where it can keep going higher.
Mm-hmm.
But even if that greed turns into a loss, you have 30 grand pocketed from that. So if your viewers take nothing else from this, the concept of selling half when it comes to your profitable positions is probably the number one thing that nobody does, which
Mm-hmm.
could have a huge impact on their trading accounts if they started to do that. I mean, no
Mm-hmm.
one said you would have to buy and sell at your entire position every
Right.
single time. And that's what separates trading from gambling, for example. Like,
Mm-hmm.
if you got, or sports betting, right? If you bet on a sports team and they're up 30 points at halftime, you can't call your bookie and be like, hey, close my position off. Like my team's looking good. No, you got to wait to the
Right.
final score, right?
Mm-hmm.
Well, in trading, you could sell half, and that's the beauty of it. So
Mm-hmm.
that's ability to start thinking that way can just have a
Mm-hmm.
tremendous impact on your trading accounts if you start implementing that.
For sure. I like that. Yeah, that is definitely a great takeaway. So we see it. I know you see it. Many people are using the same strategy over and over, hoping for a different result. And we know what that means. That's a video for another day.
Yeah.
But what is the biggest mistake that individual investors are making when they're making trades day to day?
Well, individual investors they tend to all look at the same indicators, right?
Mhm.
Like pull up a chart on Yahoo Finance and everyone knows where the 50-day moving average is, and everyone knows where the 200-day moving average is. So like buying at that support level is really no big secret. The whole world
Mhm.
knows that, right? So if you're looking at the same indicators that everyone else is looking at, that's not really too
Mhm.
much of an advantage. So I remember one of the most valuable secrets that I learned when I was trading on the CBOE. I mean, this was back in 2000, 2001 during the dot-com boom and
Mhm.
bust cycle. Uh, the guy that I was clerking for, this was completely kind of just off the cusp, but he just turns to me one day and he's like, if you learn nothing else, learn this.
Mhm.
You want to make your buys at the same spot that everyone else is getting stopped out. And I'm like, I was a kid at the time, but I'm just like, okay, I'll write that down, right? But like,
Mhm.
no truer advice has ever been, kind of bestowed upon me by
Yeah.
anyone. Like, when everyone else is getting stopped out, you want to be the one entering that trade right there, because it seems like everyone is throwing in the towel. That is like the rock bottom moment. So if
Mhm.
you ever want to get an undervalued asset, it's where everyone else is getting stopped out. And if a stock moves below a support line or whatever, like everyone else is saying, that's it, I'm done. That's where you want to enter.
Mhm.
So if you could isolate those moments, that gives you great entry prices where
Mhm.
everyone is pushing an asset to depressed levels. That's where you want to be buying.
Okay, so yeah, you kind of touched on my next question for you, but maybe you can add to it a little bit. So what kind of advice would you give to an investor or trader who isn't ringing the register at that 80% clip that you're talking about?
Okay. So this is kind of goes into more of, the mentality of trading, like the
Mhm.
emotions of trading, right? So
Mhm.
if you're like below 50% on your accuracy rating, then I would take a step back and before entering a trade, have some preset like, limits in place.
Mhm.
Like I'm going to be entering this trade at this level. My target is for it to hit this level. If it does, I'm going to sell half. And
Mhm.
then my upside target, I'll let that other side run. And if the half sells down, I'm going to close it out, lock in a winner no matter what.
Mhm.
If I'm wrong, I mean, and look, trading, like I call them landmines, right? Like trading is full of landmines. You
Yep.
enter a trade, everything's going well, and then some Fed official says something about inflation, the whole market turns around on a dime. Like you couldn't control that. That's a landmine. But
Mhm.
you have to have a plan for the landmines that will eventually, like inevitably hit when you're in a trade. So if a trade goes down 20%, sell it, move on to the next one, right? Like a lot, I know a lot of people just are like, oh, it's going to come back, it's going to recover, and
Mhm.
yes, it might, but at what cost, right? Like
Mhm.
you're going to sit around looking at this thing for the next 4 or 5 days, having it be down 30%, 40%, 50%, 60%, and then you're like, dang it, I should have just sold it at 20%
Yeah.
and on because there's 10 other opportunities that I want to play. So it's not necessarily like admitting defeat, which a lot of people think in their minds, like, oh, I lost money on this trade, I'm a loser. Well, no, you had a landmine, did nothing you could do. So you stop out, move on to the next.
Mhm.
So that ability to just kind of pull the plug quick, especially if market landmines happen, allows you the ability to like put it in your rearview mirror, move on to the next, and then eventually you're going to be hitting those big winners, and that's what you want, to leave the losers in the past, hit the winners, and then you're on your way.
So I always like to kind of ask these questions during interviews like this, but what stocks are you looking at? Maybe even sectors outside of technology, even going into 2024 here.
Yeah, I mean the technology trade has been super crowded. We all know
Mhm.
that, right? So I think getting into tech is you're at the very, very end. If you're getting into tech right now, you're playing the buy high with the hope of selling higher game.
Mhm.
That's not something that I'm willing to do. I prefer to look for inefficiencies and undervalued opportunities. And I do have a couple that I'm willing to share with you guys today. Um, the first is, well, okay, so there's two basic themes, when it comes to 2024 predictions, right?
Mhm.
So the first theme is that I'm bullish on healthcare and biotech, and here's why. Throughout the 2023 investing year, you had all of these, pharma, healthcare, and biotech funds. They totally underperformed the market. The
Mhm.
S&P was up 24% last year, where like the S&P biotech index was down only up 6%, 7%. The healthcare index was only up 1.6%. So they were huge underperformers. And the reason why is that when the Fed is raising interest rates, money becomes more expensive. And all of these biotech firms and healthcare firms, they are constantly just putting money into all of their, testing and drug approvals. That's a
Mhm.
ton of money. And when money is more expensive, that hurts them. And that's why they underperformed. Well, here in 2024, we are eventually going to get Fed rate cuts. And what that will equate to is money is becoming cheaper. So these biotech firms are not going to be burning through such large amounts of cash at the higher levels of interest rates. That is going to help them. So the one play that I really like, if you want to have like basically every major biotech firm all in one, is the BBH.
Okay.
It's the S&P Biotech ETF. It has names like Amgen and Vertex and Regeneron and Gilead Sciences and Biogen. So you have in one asset, BBH, all of the top biotech firms that are going to, in my opinion, have a great bounce back year here in 2024. And if you only want to choose one of those names, you don't want the whole basket. You just want one. I love Amgen at these levels, and the ticker symbol is AMGN. It's the #1 holding within the BBH. It just dropped, 30 bucks, 40 bucks on earnings. It's back down to a great support level. I really like Amgen here. So BBH and Amgen, AMGN, two great picks for the year 2024 in the biotech space. The second prediction, if we do we have time to get into one
Yes,
more?
we want to hear it, Bryan.
All right.
Don't leave us hanging. You got to give us another one.
I know. Well, sometimes I get excited and I tend to talk a lot. So
That's all right. We want to hear it.
I'm droning on and on. You could pull the plug on me, but real quick. So 2024 obviously is an election year. Okay. One of the most underappreciated, underrespected sectors that we have right now is the defense and the aerospace sector. We have geopolitical flare-ups almost constantly, like whether it's Ukraine or Israel or Putin said this or Russia did that. Like, it seems like every day this escalation is getting higher and higher and ramped up and ramped up. And the market basically just shrugs their shoulders and says, it's just another cry wolf situation. We'll deal with it when we deal with it. Well, I think that's a little oversighted. And I think going into an election year, everyone loves to, if a Republican wins, these stocks will benefit. If a Democrat wins, these stocks will benefit. Well, when it comes to defense and aerospace, no matter who wins, that sector will benefit. So you have, Democrat, Republican, defense and aerospace is the way to go. And with all of this geopolitical uncertainty, the second something triggers and it's for real, you are going to see money flow into that sector. So the time to buy it is now, when everyone is like looking the other way and seemingly unconcerned about this. So there's only one, well, in my opinion, there's really only one pure play for this, and it's the ITA. It's the iShares US Aerospace and Defense Sector ETF. So the ticker is ITA. And with that one asset, you get exposure to Boeing, RTX, Lockheed Martin, General Dynamics, Northrop Grumman, like all the major defense and aerospace companies are held within that one. And the other thing that I really like about this is Boeing is their #1 holding. And as you know, Boeing is down huge recently because they forgot to drill 3 bolts into a door latch on an Alaska Airlines plane. This is a one-off event that's causing Boeing to drop. Like, they are going to fix this. They're going to get it situated and handled. This is just a great opportunity to buy this thing on the dip here because of Boeing. Once Boeing recovers, and as we go throughout 2024, the ITA is going to have a great year. And so that's one. And then, just like I did with the biotech sector, my favorite name within the ITA is Raytheon, RTX. And the reason for that is this new era of war that we're entering. Say we do go into war. It's all going to be missile related. We're going to shoot missiles here, you're going to shoot missiles there. Well, the #1 defense is, if a missile's in the air, having the technology to intercept that and shoot it out of the air. And Raytheon has the #1 technology in the world for anti-ballistic missile defense technology. So I love the ITA. Within the ITA, I love Raytheon, RTX more than any of them. So that's your 4 picks: BBH, Amgen, ITA, and RTX. Those will be great plays for the year 2024. And I think if we get positioned in them now, early on, when everyone's focused on technology and NVIDIA and super microcomputer, we could sneak into these at great levels and then benefit when everyone realizes in 6 months what we know right now, that these are great plays.
Truly great insights you've provided with us today, Bryan. Thank you so much for sharing those tickers with us. I know that our viewers are going to want to know more from you. So tell us, where can they find you?
Yeah, so if your viewers like these ideas, I mean, we're full of ideas. We love trading ideas. We publish our #1 top trading idea every single day. It's totally free. It's on mtatradeoftheday.com. So we just publish our top trade. We email it out. We post it on our website. So if any of if your viewers want to get our top picks every single day delivered right to them, they could sign up for free and check us out.
Awesome. Well, we know that navigating the complex world of trading requires more than just a hopeful strategy. You provided some great takeaways here, so thank you again for that. Yes, so those that are hungry for more of Bryan's insights and specific stock picks, I've gone ahead and linked his information down below. Thank you again, Bryan, and to our viewers, we'll see you right back here at Market Beat for more.
Yeah, thanks. Anytime.